In this video, guys, we're going to be talking about one of my favorite ways to trade the Forex news. Stay tuned and we'll get into it right after. Oftentimes in the currency market, guys, we can get some really big news events that will cause prices to move 50 to 100, maybe even more pips in a matter of minutes or even seconds. So today we're going to be talking about a simple strategy that you can use to actually trade the post-news event. I don't actually recommend trading the news release itself because spreads can be huge and brokers can freeze their accounts. There's all sorts of ugly things that can happen trying to trade the release itself. If you are new to the channel, guys, before we get into the video, make sure you hit that subscribe button and support what we do around here. In case you don't know me, my name is Trader Nick. I make educational content here on YouTube for Forex traders and traders alike. In today's video, like I said, we're going to be talking about a simple strategy for trading the news in the currency market. Now, before we go any further, in case you don't know where you can find about currency news events, you can go to forexfactory.com. You can see up here on the top left. Very simple. What you're going to want to do is go to the calendar and you can see all of the major news events. If you filter right here, you can click for high impact, red being high impact, yellow being lower impact, all that sort of stuff. You can play around there and find when news events are going to happen. So back to the charts here, keeping things simple. What we're going to do here, this strategy is going to focus on taking advantage of the fact that a lot of times in news events you get a big move one way before quickly reversing the other way. Now this is due to because a lot of times the news event will overreact initially and prices will normalize or come back after the actual news is over. Okay, so what we're going to be using in this strategy is we're going to use a Fibonacci tool, but very simply the principle we're going to use is we're going to draw the Fibonacci from the start of the spike to the close of the spike. We're using a 15-minute chart here. You can see in the top left 15-minute, and what we're going to see here is we're going to see the effect of the news event. We're looking at USD Canadian, and what we're going to do is we're going to draw from the start of the move to the close of the move. You can see the move ended right here. And now you'll see my Fibonacci tool is actually different than usual, and you can go into the properties by right-clicking and clicking Fibonacci properties. You can see I have some different levels identified here. You can see I have negative 0.25, negative 0.5, 0.5, and 0. Now what this is going to do is it's going to create some levels here for me to visualize where I could potentially put some stops and targets. So after the 15-minute closes, you can see this is the actual bar that we had news events closing in, right? Now what we're going to look to do here is after that 15-minute bar closes, on the very next bar, what we could do is we could trade back towards the initial direction that the price came from. So what we could do here is we could actually identify that this would be our entry, right? We could buy here and we could set a stop loss either at that 0.25 or at the that 0.5 below, kind of up to you, right? You have a little bit of leeway to do what you would like to do with this strategy. And then what we're going to do is we're going to set a target either at this 50% retracement or the 100% retracement. Now what we're trying to capitalize, again, we're trying to capitalize on the fact that a lot of times news events spike one way and come back over the next hour or so. That's exactly what this strategy is looking to do. And what we're going to do, like I mentioned, we set a buy 15 minutes after the news event actually happens, trying to take advantage of a news retracement back to where it started. You'll see this happen again and again in the currency market. Sometimes you don't get the full retracement, but it's often enough that you can actually take advantage of these moves and trade the fact that a lot of times they do reverse. Here you can see we didn't quite get the full retracement back to the start, but we did get a 50% retracement. There's a lot of stuff you can do here to take advantage of the fact that oftentimes the news will spike one way and retrace back the other way. Hopefully this helps, guys. It's a very simple and quick video. Like I mentioned, taking advantage of the fact that oftentimes news events spike one way and quickly retrace and regain where they came from. Not every time, but often enough. At the end of the day, guys, it's up to you how you decide to use this, but these are some simple principles that you can use. You don't even have to use the Fibonacci tool necessarily, but I like to use it because it's very, very helpful in just identifying stops or levels of places to put your take profit and stop loss. What you can do is you can just calculate 50% of the move yourself if you don't like to use the Fibonacci tool. But what you basically want to do is you just want to say, okay, in this case, we might have been going for 34 pips, or we could have gone for the full retracement, which would have been this entire bar, 67.5 pips there, guys. So hopefully that makes sense. Hopefully this video was helpful. Again, if you're new to the channel, make sure you hit that subscribe button. I've got tons of helpful information down below in my channel. You can go check all of that stuff out. Hopefully it will help you. I do appreciate you taking the time to watch this video, and I hope you have a great day.